Hi, I am Steve Hunt. I'm a certified public accountant, and I'm the owner of College Tax Refunds, where we help recent college students and their parents get thousands of dollars back that they don't even know they missed on their old tax returns. And I've been doing a deep dive into 15 critical, common, costly mistakes that recent college students and other young adults and their parents very often make at tax time. I'm trying to help you avoid making these critical, costly mistakes and also help you figure out how you can fix or amend your old taxes to claim the money that you missed from prior years. Today's mistake that gets made sometimes is that newlywed college students or young adults will sometimes file separately when they're married. Instead of filing married filing jointly, they'll do married filing separately. And this is a problem in most cases because you should only file separately if you are simply unwilling to file your taxes together, even if you're going to lose money when you file separately. So basically, you've decided that you're not talking to each other. You don't want to file your taxes together. Or maybe for whatever reason, you're like, look, we don't share our finances. You have your finances. I have my finances. We don't share our finances, even if it could be financially beneficial for us. I just don't trust you. You don't trust me. And so anyway, the point is, you're not having a very good financial relationship, and you really want to keep all of your finances separate. Maybe you're already divorced when tax time comes in April, and so even though you may have been married last year, even if you were married all the way up until March, but now you're doing your taxes and you're divorced and you're really not talking to each other, then you file separately. But notice, this is just one reason, and it's basically the only and the most important reason why you want to file separately. There's almost no other reason. But I will give you a couple more. One is that if you think your spouse may be guilty of tax evasion, you probably don't want to file jointly with them because you don't want to be guilty of tax evasion also. Or if you've computed your tax return both ways, like jointly and separately, and you've really determined that separately is better than jointly. Don't just assume separately is better. Don't just do that one and leave it at that. You've got to try jointly and try separately, and only use separately if it's actually better, and it just won't be most of the time. Okay? Be sure that when you try it jointly, that you claim the full American Opportunity Tax Credit, the full Earned Income Credit, and all of the other credits that are available only to people who file jointly. Because you don't want to be, filing jointly, looking at it and saying, oh, we're only getting back $100. And you file separately and you say, oh, look, we're getting back $300. And the reason you're getting more back separately is because you didn't do your jointly one correctly. So you want to make sure that you claimed the full credits, because there are certain credits that are only available to people when they file jointly. Credits like the American Opportunity Tax Credit, which I've talked about several times in several other videos. Please watch those videos to see just how complicated it can be to figure out whether you actually computed the full American Opportunity Tax Credit. But there's that one. There's the Earned Income Tax Credit, and there are other credits and other benefits that are only available to people who file jointly. And that's basically why, for most of you, you're gonna want to file jointly. So when should you file jointly? Well, if you were legally married on December 31st, then you should probably file jointly. Even if you're not legally married now, even if it's time to file your taxes and you were married back in December and now you're divorced, you still probably want to file jointly if you are talking to each other and willing to work together to split the refund. You're going to get a better refund, a better tax result if you file jointly if you were married on December 31st. So again, even if you weren't married the very next day, you got a divorce on January 1, you still might want to file jointly. And even if your parents say, hey, I know you guys are married, but we want to claim you as a dependent. Like some parents do this. This is the first year you got married and your parents still can claim you as their dependent because you were living in their home for most of the year before you got married or whatever, and they think it's going to be more beneficial to them to claim you as their dependent. That doesn't matter. You can still file jointly even if they're claiming you as their dependent, so you don't have to file separately. And you definitely want to file jointly if you are willing to work with your spouse to save you some money, okay? So whenever you want to get the biggest tax credit and refund possible, you probably are going to want to file jointly. All right, so I wanted to make that very clear. This is a mistake we see that some recently married students will make. They'll file separately. If you did this in the past, you can correct it. You can amend your old taxes. You can go back and file jointly. Again, it's possible that you're divorced. You're going to have to reach out to your ex and say, hey, I just learned that we could get more money back on that old taxes if we go ahead and refile jointly. Are you willing to file it again and sign the tax return with me, and we'll file jointly, we'll get more money back? So how do you know, though, if you'll actually get more money back? Well, if you go to collegetaxrefunds.com, this is the business that I created to help recent college students and young adults like you to find out exactly how much money you missed on your old taxes and try to help you get a bigger refund. And again, this is usually money that you don't even know you missed. And so here's this free, a risk-free calculator where you can punch in a few numbers from your old tax return, including your tuition and your scholarship money if you were a student. And in this case, though, we're talking about specifically money that you probably missed because you filed separately. But again, if you were a student, enter your tuition information, absolutely for sure. And enter your scholarship information, because maybe you miss money on the American Opportunity Tax Credit as well as you miss money on filing separately. In fact, if you filed separately, you can't claim the American Opportunity Tax Credit. So you absolutely missed that valuable education credit if you filed separately. And so you want to put in all of your data. And again, with this calculator at collegetaxrefunds.com, you don't have to put in any self-identifying information, not your social security number. You don't have to put in your email address or your phone number. You can just put in a few dollar amounts from off your old taxes and off of your Form 1098-T. If you were filing separately, you're going to need both of your tax returns, yours and your spouse's, that say that you are filing separately. You're going to need those numbers. You're going to take a few numbers off of those two tax returns, enter them into the calculator, and instantly you'll know how much money you missed because you filed separately. And then if you want, you can go back on your own, amend or fix your old tax return by filing jointly. You have to read up on all the instructions on how to do that. The IRS might question it. You might have to deal with them, but you can do this by yourself. Or you can use College Tax Refunds, and I'd be happy, my team would be happy to prepare an amended return and defend it to the IRS and help you get that money. That's what we do. We've helped thousands of students get millions of dollars back on their old taxes. You'll notice from this website it says 9 million students per year miss about $1,300. That's the average. If you go to this website, you can scroll down and you can see exactly why so many students miss money on their old taxes. There's a video explaining it to you. You can also see testimonials from some of the thousands of students that we've helped. You can see this fact sheet from the irs.gov website where the IRS explains that 9 million students are missing money every single year. And so if you had scholarships or Pell Grants, if you filed separately, please don't let the IRS keep money that they owe you. Please go ahead and fix your old taxes. Get the money back that belongs to you. You probably weren't even sitting around saying, gee, I wonder if my old taxes were done correctly. I wonder if I could get an extra $1,300 from my old taxes. Well, you'd be surprised, because 9 million college students every year miss money and can get more money back. The average is $1,300. I invite you to try collegetaxrefunds.com. If you have any questions about what I've said, about filing separately or jointly, put them in the comments below. I'll get back to you. Or reach out to me at my website at collegetaxrefunds.com. Please subscribe to this channel and click the notification button, the bell, so that you can be notified whenever we make more videos about mistakes that students often make on taxes or about any other financial advice that we have, because I just want to help you obtain more wealth. And so I'm making these videos to help you out. Also, like this video, please, and share it with your friends, especially your friends who were recently college students. Or share it with the parents of college students, because all of them may have missed money too, and you really want to help them get their money back. So please share the video, subscribe, and I really hope that you will not let the IRS keep your money. If you filed separately recently, go back and fix it to jointly and get that money back that you missed. Thanks.